In a world drowning in debt and inflation, stocks are shaky, bonds are weak, real estate is out of reach. But one asset class has stood the test of time. Gold, silver, copper, platinum, palladium. They aren't just metals, they're protection. Which ones will protect your wealth in 2025? Let's find out. Gold, the king gold, is not just a shiny rock. It's history's longest-standing form of money. From the Roman Empire to modern central banks, gold has always played the role of ultimate value. Unlike fiat currency, gold cannot be printed. It must be mined, processed, refined, and stored, all of which require real energy, time, and cost. Why invest in gold in 2025? The global economy is currently sitting on a fragile foundation. As of mid-2025, the US national debt has surpassed $36 trillion, with no sign of slowing. Meanwhile, central banks have kept interest rates artificially low for over a decade, flooding markets with liquidity. The result? Massive inflation, masked by manipulated CPI numbers, and a severe devaluation of the US dollar. Every time the Federal Reserve prints money, the dollar you hold becomes weaker. Every time a government announces another bailout, stimulus, or budget expansion, gold becomes stronger. Gold isn't just a hedge against inflation. It's a bet against stupidity. And right now, stupidity is in abundant supply. Physical versus paper gold. If you're going to invest in gold, go physical. ETFs like GLD may track the price, but they come with counterparty risk and don't allow you to take possession. Physical coins, bars, and vault-stored gold are far safer in systemic crises. Gold's recent performance over the last 5 years, gold has steadily climbed in value. Despite pullbacks, it has outperformed many global indices. As of 2025, gold is trading above $3,000 OZ, and some analysts are forecasting prices over $5,000 in the coming 24 months, especially if de-dollarization continues globally. Geopolitical uncertainty. Gold also thrives in geopolitical chaos, and there's no shortage of that. From Eastern European conflicts to Chinese economic slowdown, from Middle Eastern tensions to BRICS nations stockpiling gold, it's clear. Gold is becoming the central bank asset of the new world order. Silver, high potential, high risk. If gold is the conservative, stable asset, silver is its volatile little sibling. Historically, silver has traded alongside gold. But due to industrial demand and speculative swings, it tends to have bigger booms and deeper busts. Gold to silver ratio. Why it matters. The gold-silver ratio tells us how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio averaged between 12.1 and 20.1. Today, it's over 80.1, sometimes even climbing above 90.1. That's wildly out of historical norms, suggesting that silver is significantly undervalued compared to gold. Investment versus industrial use. Silver is unique in that it's half investment, half industrial. It's used in solar panels, semiconductors, electric vehicles, 5G infrastructure, medical instruments, and even water purification. The silver used in these applications is often not recycled, it's lost. That means demand is climbing while supply remains constrained. And here's the kicker. New silver mining projects are rare, and most silver is actually a byproduct of other mining activities like zinc, lead, and copper. That's a recipe for a massive supply squeeze. Risk and volatility, but silver isn't perfect. Its price is more volatile than gold. It tends to overreact to both bullish and bearish news. In bull markets, it can double or triple in value quickly. In bear markets, it can get cut in half. It's not for the faint-hearted. But if you can stomach the swings, the upside potential is incredible. Silver has the explosive characteristics of a leveraged gold play, with the added tailwind of booming industrial demand. Copper. The real economic thermometer, copper, isn't flashy. You won't see headlines about it hitting all-time highs every week. But if you want to understand how the world economy is really doing, look no further than copper. Why copper matters? Copper is everywhere. It's in power grids, electric vehicles, plumbing, computers, factories, and renewable energy infrastructure. That makes it the ultimate industrial metal and a strong economic barometer. When copper prices rise, it usually means global manufacturing and infrastructure spending are ramping up. When they fall, economic activity is slowing. Supply crunched, the problem? There isn't enough copper. New copper discoveries have been declining for years. Existing mines are aging and becoming more expensive to operate. Meanwhile, demand is skyrocketing due to electrification and green energy initiatives. Despite this, very few investors are buying copper. Why? It's hard to store physically. It's not glamorous. And most retail investors don't even think of it as a wealth asset. But that might be your opportunity. Copper is quietly becoming one of the most undervalued commodities of the decade. As demand soars and supply lags, expect prices to surge. In many ways, copper is the new oil of the 21st century economy. Platinum, forgotten, but intriguing. Platinum once traded higher than gold. In fact, in the early 2000s, it was considered the rich man's gold. But that era is long gone. Today, platinum is cheaper than gold and barely talked about in investment circles. Where is platinum used? Platinum is primarily used in automotive catalytic converters, helping reduce emissions. It also has applications in jewelry and some industrial processes. But its use cases are narrow, and its price is driven more by short-term supply-demand imbalances than long-term fundamentals. Platinum is also politically sensitive. A large portion of the world's platinum comes from South Africa, where labor strikes, power outages, and political unrest frequently disrupt production. Investment value? As an investment, platinum is unpredictable. Its price is prone to huge fluctuations, often without warning. Demand isn't growing in the same way as silver or copper, and its monetary history is almost non-existent. That said, some investors speculate on it as a contrarian play, hoping it regains lost ground. But know this, platinum is more of a trade than a long-term hold. Palladium. The wild card. Palladium is one of the most volatile metals in the world. Its price has soared and crashed more than once over the past decade. In 2016, it was under $500 per ounce. By 2022, it had surged past $3,000, then collapsed back under $100 in just a couple of years. Why the wild ride? Like platinum, palladium is used in catalytic converters, especially in gasoline vehicles. As emission standards tightened globally, demand for palladium skyrocketed. But with the rise of electric vehicles, its demand is now uncertain. Palladium is also mined in limited quantities, mainly in Russia and South Africa, making it highly vulnerable to geopolitical shocks. Should you invest? For most investors, Palladium is not a long-term hold. It lacks stability, predictability, and wide industrial application. Its price is too easily manipulated by short-term supply shocks and speculative trading. Unless you're a professional commodity trader, Palladium should be avoided as an investment asset. Final thoughts. What should you actually buy? So where does that leave us? Of the 5 metals we've explored, gold is the best long-term wealth preserver and hedge against systemic risk. Silver offers explosive upside and growing industrial demand, but with more volatility. Copper is an underappreciated bet on global infrastructure and green energy. Platinum is a speculative play with limited use and erratic pricing. Palladium is a high-risk metal whose peak may already be behind it. Our recommendation, if you're building a portfolio in today's uncertain world, make gold your foundation. Think of it as your financial insurance. Add silver for growth potential and partial exposure to tech/green energy. Consider copper ETFs or mining stocks if you believe in long-term infrastructure and EV trends. Approach platinum and palladium with caution. Unless you're actively trading, they're too unpredictable. Remember, precious metals are not just about price. They're about preserving value, hedging against risk, and understanding macroeconomic shifts. And in 2025, with record debt, fragile currencies, and rising geopolitical tension, they might just be the smartest assets you can own. If this helped you see things differently, drop a comment and it will answer your questions. Subscribe for more honest finance content, and remember, smart money doesn't sit. It moves.